Hello everyone, and welcome to AEM's monthly report on the July retail sales for ag tractors and combines. My name is Benjamin Duck, and I'll be sharing with you today some of the recent developments in ag retail sales, but I will also like to share some thoughts on the USDA WASDE crop report as well as the Chinese currency devaluation. Now, as you know, the Ag Tractor and Combine report provides our members and the industry as a whole not only insight in the monthly retail sales numbers, but also in the underlying trends of the makeup of the market by equipment category, size, and beginning inventory. Now let's take a look at the numbers. When we look at the July numbers, we can immediately see that this month's retail sales continues to follow the same trends from earlier in the year. It's important to note here, however, that we saw a giant jump from the single-digit growth numbers earlier this year. This makes this month's retail sales for less than 40 horsepower and 40 to 100 horsepower the largest in more than 10 and 8 years respectively for this period. We noticed similar trends in April. Looking at the year-to-date growth, the 40 to 100 horsepower had some reversals in direction, but it seems like an overall trend is forming. Once again, sales of smaller equipment is tied to landscaping services, hobby farmers, and the livestock industry. Production of ag machinery continues its downward trends as two-wheel drive, 100 horsepower, and four-wheel drive tractors, as well as combines, experience negative year-over-year growth numbers. However, due to the sheer size of the small tractor segment, total numbers for farm tractors still grew compared to last year. Now let's take a look at some of the drivers behind farm income. The USDA recently released its WASDE crop report, indicating that it's raising its forecast for corn and soybean production due to better than expected crop yields. Higher production means lower commodity prices, which in turn results in lower future farm income and less machinery purchases. The corn harvest is expected to be 12.5 billion bushels and would be the third largest on record, running behind the record harvest in the last 2 years. The soybean harvest was estimated to be 3.9 billion bushels, the second largest on record, and 1% down from last year. Corn futures plunged more than 5% to a 10-month low, and soybeans dropped 6% while wheat sank 3%. Export expectations for soybeans, corn, and wheat will also continue to suffer as major international markets will look towards other producing nations due to the stronger dollar. Worldwide supply for coarse grains was projected 4.8 tons higher, while global demand underwent a slight reduction. And last but not least, let's take a quick look at the Chinese currency situation. On August 11th and 12th, the Chinese government devalued its currency by 1.9 and 1.6% respectively, totaling a total drop of 3.5%. AEM continues to monitor this situation as it goes forward. Some groups are calling it an artificial boost for our economy and their exports, especially as the Chinese indicators have recently missed their targets. As yuan is pegged loosely against the US dollar, it has experienced the same appreciation, stifling exports, which were down 8% year over year in July. The lower yuan actually compounds issues for US manufacturers as their export positions continue to deteriorate. The devaluation of the yuan also has an effect on demand for commodities as they become more expensive to the Chinese relatively. This causes imports for US milk, soybeans, and cotton to decline. Given China is such a large importer of agricultural commodities, any impact is of importance. The 5 takeaways from this monthly report are: US retail sales continue to focus on growth in smaller equipment categories. The USDA crop forecast was better than expected, lowering commodity prices. US exports to China are becoming more expensive, and Chinese imports to the United States are becoming cheaper. And lower Chinese demand is hampering commodity prices, potentially lowering future farm income. This month, we've also sent out our quarterly ag survey looking at the North American equipment market. We have improved the survey by adding information on production, backlog, as well as new orders and demand by equipment category. To sign up for this survey, please send me an email at the following address. This concludes our monthly ag report. Thanks for watching, and don't forget to visit aem.org/agreports.